Okay, guys, let's move on. So this is the JPX, which is the Japanese yen index. Okay. Um, and we want to study what is happening. So we started from the 3 months time frame, and we all said that the 3 months time frame is bearish. It's bearish. But then we resorted to looking at the last lower high and then the last lower low. So lower low, lower high. And we are trying to use that area as our swing range. Okay. So that we can now study the market and find trade ideas based on the most current swing range. Okay. So we have the last low, lower low, and then this is the lower high at this point. And then we can see that price has comfortably broken the lower low. Okay. So this is it. Now, the 3 month time frame is very big for us to focus on. So we then move to refine these levels that we have marked, this swing range, based on the 1 month time frame. And this is still the line chart. Okay. And the line chart is very helpful because it can help you get the exact open and close point of the range that you are trying to utilize to and deal with. So when we refine the points to the um, monthly time frame, we can still see that the point we have is this, the low is here, and the high is somewhere here. Okay. But we still want to refine it from the weekly time frame to the monthly time frame to the weekly time frame. And we can still see that with that, the low is taking us a little bit down. And this is all like a refining process that we are going through. Okay. So then we still want to focus on the daily time frame. So we move to the daily time frame, and from the daily time frame, we are going to stop there. So we can see the daily time frame gives us an exact point where we can put our level or line at, okay, and focus on. Do you see the transition between from the 3 months towards the daily? You can see how the levels that keeps changing. Okay, the levels keep changing. That is, the higher the time frame, you see the levels keep changing. Okay, the downside price started expanding down, and up to price started expanding up. Okay, the smaller the time frame becomes. So on the daily time frame, we ended there. And what are we looking inside this range? So we have a lower low and we have a lower high area here. And then we can see price has currently made a new lower low. Okay. But then before price will make the lower low, what happened at the lower high at the top here before price now made the lower low? That's what we are currently studying. I mean, this area. Okay. So if you look here, and I want to let you know that we want to look at the external point where there is reaction. Okay, so at the top here, we can see that here, so we are just looking at from this point low here as price was going up. So from this point, price just moved straight away up and hit this exact point. Boom. So once I spot something like this, I put a line at this exact point here. And what did we learn about why this point can be so interesting? At this point, we can see that price reacted and came down. There was a reaction. What is the meaning of this reaction? We are saying sellers came into the market at this point and they pressed or pushed the price down. Are you all okay up to this point? Can you all follow me?
Yeah.
Okay, perfect. Now, the moment we see there has been a reaction from this point down, this level becomes an interesting point for us to observe. Okay, so now, if we are saying sellers are here, how do we know sellers are still there? And the concept is this: we will know sellers are still here if only price gets to this point and there is another sell or reaction. I hope you guys are getting me now.
Yes, sir.
Yes, sir.
Okay,
Yes,
good.
sir.
Now, price gets here, it comes up, gets to the same point. But unfortunately, yes, there were some reaction here because when we use the candles, if we use the candles itself, like candles on the line chart, you might not see it well, but on in candles, you could see that when price got here, there is a bearish daily candle. Can you see this red one candle here? This bearish candle, can you all see that here? Where my mouse is.
Yes, sir.
Good. What is the meaning of this bearish candle? It means that exactly around or on the black line that I put from the line chart, the sellers came in to try to push the market down, but they were not successful. Buyers were able to push the price up more, and price stayed above the black line. Okay, so at this point, we will start to be doubting, well, are sellers still at this point? We'll start to be doubting. But once it went above it, price now dropped back, and the moment price will drop back and it will stay below the black line, which is this area, and does not in any way attempts or consistently goes above the black line, sellers has the possibility to still take charge and push the price down. Why do you think that will happen? Why do you think that will happen?
Because that says they've done it before
Yes,
in the
thank you, sir.
past.
Because previously here, they did it when price was stayed below here. They did it. And on the candle chart, we can see the story is much clearer. You can see how there was a rejection, a wick from the top here, and price closed exactly. So you see why the line chart is very helpful. The line chart gives you the open and close of the high and lows of the range you are dealing with. Okay, it will not take into account the wicks. It will take into account only the close and opens, which is very, very important. Are you all with me?
Yes, sir.
Yeah.
Yeah, because if not, you don't utilize the line chart in this way, you would think price wants to go up because there's a body close, but in essence, on the line chart, there is not. Okay, so now price go above again, then we see price drops and stays below. You can see there is a liquidity hunt. Price pushes all the way up and all of it rejects and closes down here. All these are symptoms and signs and communication to us that sellers are very strong at this point down. Okay, so now we get a reaction from here down. The question is, are sellers still at the below the black line? Are sellers still active or in control below the black line? That's the question. How do we know that? We will only know if the price goes there again and sellers react. So you mark the level on your chart and just be waiting. Once price gets there, look at the reaction. So if you have a paid version of TradingView, you can set an alarm here. If price gets here, then you start watching what will happen there. Now, price comes back again here, then we can see reaction. Hit, drop, hit, drop, hit, drop. And I use this word. As long as price consistently stays below, sell. Sellers will take control. And I mean it. Because sometimes it will not just hit once and sellers will push the price down. It will attempt, even sometimes price will go above it, looking like it's like Salim, what happened on 50 index? Okay, Salim,
Yeah.
what happened on that 50 index? It looks you saw the thing on 1 hour as yeah, the thing is just moving, breaking. On the 4 hour, everything rejected.
Yeah.
You see? So it couldn't stay above that level. That's what I'm talking about. So consistently staying below. So, and this also comes with what time frame are you going to use to monitor this? And the higher the time frame, the better. So let's say for this analysis, we are trying to stick to the daily time frame. So we want to say that as long as on the daily time frame, price stays below this black line, you want to be selling. Why? Because sellers sold from this point and they sold below this point. So on the daily time frame, as long as price stays below this level, we are selling. Does this make sense?
Yes, sir.
Another reason why we are selling is also because the general trend is already bearish and price gets here and for at this point price is trying to make a lower high. So it makes sense for us to be looking for sales because the general trend is what? Bearish. Now,
Bearish.
the question I want to ask all of you is, what do you think will happen on this daily time frame if the price comes up again and this time we get a body close above this level? What do you think market is trying to tell us?
The trend has changed.
Yes,
Buyers want to
it
take
might
charge.
not necessarily mean the trend has changed, but what it's telling us is that there is an initiative, okay, or there is an indication or initiative that is being given or shown that above this black line, buyers can take control. That's the meaning. Because the market can give a close above here and still drop, 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 and keep going down and make a lower low. The market does what it wants. But at least from what we are learning, this will be an intention being revealed, or an initiative that from the daily time frame standpoint, the market is telling us that I want to go up higher, but I want to go up only above this level. Does that make sense?
Yes, sir.
Yeah.
Now, after the market makes that big bullish close, what do you think will happen if the market is to drop back and stay below this black line? Maybe it goes up again. What do you think will happen if the market does something like this?
Sellers will activate and push it down below.
Perfect. And from my experience, this market will never sell if prices will go above it on the daily time frame. It will never sell without dropping down and retesting this exact same black line. It will utilize the black line before it finally falls down. And this is for all of you to backtest. So, you see, can you all see this point here, this area here? Can you all see here?
Yes, sir.
What do you think happened here? What do you
Buyers
think?
The
push the
buyers
price up.
The,
Perfect.
the
As price
buyers
was coming down,
took
it hit
charge.
this place and buyers took it up. Okay? Now, price now comes down, go below it, and it goes up. Okay, but let's watch closely how it was able to go up after it came below it. Just, please, I want all of you to pay attention and tell me this thing is not working. Price came below it, all right, around here. Price came below it. If all of you can understand this thing, trading will become very simple for you, all of us, and we will be happy. It came below, all right, because if buyers have taken price up at this point, which is on the black line, what do we expect now? We expect that on the same black line, when price gets here, the buyers should react. So you should wait for to see the reaction. You don't need to enter your trade without seeing the reaction. You have to see the reaction because it is the reaction that will tell you that buyers are really still there. Okay, because the momentum that the sellers were pushing this price down, you cannot just start buying here only because buyers bought here before. That doesn't make sense. You need to wait to see the market get to the black line or that price and see what will happen before you make a decision. So this time market gets here, there was a sweep, a close below the black line. That's very fine. You are still waiting. Then you can see there was a rejection and a bullish candle took off. Then the price came down again. It stayed below, hit the black line and dropped down much further. Okay. Then after doing that, we can see the market now moved above the black line. Okay. So at this point here, the market is trying to tell us that, you see this close below the black line here. What do you think is the meaning of that?
The sellers are trying to take charge,
Good. The sellers
but
are
the
trying to
buyers
tell
took
us
over.
that. So this is what we call indication or initiative or intention. Okay, this is an indication, this is an initiative, it is an intention being revealed that yes, buyers are here, but they can become weak. And if they are weak below the black line, we, the sellers, will take control. That's the meaning of this. I want you to see it this way. Okay, we can give it different names, liquidity sweep, whatever, but just know that this means the buyers have become weak and sellers can take control from that point and below. Now, the moment price did that, it moves above the level again, the black line. How do we know that? So you see this move above, right? You see this move above.
Yes.
How do you know that buyers are still in charge above the black line? You will only, though there has been a buy that goes above it, after price told you this level, below this level, sellers are in charge. There is a push above. You can only buy here when price now comes back and gets here and it doesn't stay below. Salim, please, I want you to get this place right. You can
Okay.
only buy if price comes back and it doesn't drop to stay below. So exactly when price now gave the indication, price just came back, boom, to that same black line. And this is the entry for the buy. And if you are buying the market from here, because of this initial bearish indication here, you cannot buy this market for long. You cannot be aiming the top like that. At least if you are buying this market, I don't know anyone who will be going above this level. Because you see a level here, your TP should at least be somewhere here for now. So that you observe what the market will do after hitting the TP. Maybe TP1 can be here. Because price has given you a level where sellers push the price down. So you want to buy to that level and see what will happen afterwards, right? Are we right?
Yeah, yes, sir.
Perfect.
Yes, sir.
Now, the moment the market now bought, it came back to the same black line again. There is still a reaction, which means buyers are still strong here. But the momentum with which or the amount of money they are putting to buy at this level this time is becoming weak. If they were putting $10 million for buys here, because their stop loss was hit with this bearish indication, they are now putting like $2 million to buy. So it's weak. And once you are not the volume from buyers are weak, sellers will take control of that. And they already told us they will take control here. Okay. So then price hit here again, it buys, then price come back. The moment we got another close below that level, we are done. I'm telling you guys, you should be done with the buys. Why? Because the whole market is already bearish. And this is just a PSR or a level that you are just using to find entries. Okay, so now that the market has told you that sellers are really in control, look at the way the close, look at the close, look at this bearish candle, look at it. The moment you get this, you are done. So this is where if I was buying before, I will now update my trade and say that I am selling below the black line. Okay, so anything below this black line is for me sells. Anything above it, so price can do stop people out. It can go above, but as long as it will drop to stay below, it's a sell. Are you guys getting the concept now?
Yes, sir.
Perfect. So we see, so this is what I'm saying. You can see below the black line, price came below, but it has to always utilize the black line for the sell, for the drop. All of you tell me, did it retest the black line before it dropped?
Yeah, we
Yes, it
did.
did.
Yes, it did. So that's it. Then now it came back again, sweep this area, but it wanted to go up, still came down, close below. Watch here, all of you watch here. Did it retest close to the black line before it dropped finally? Yes. So
It did.
push above, came down, stayed below. This candle is below the black line. Sell. Simple. Okay. So look at the sell. Big. Now we have the black line. Market comes back to the black line. The moment it gets to the black line, move above, rejection, and body close below it according to the line chart. You see this on the line chart. Boom, hit here and drop. So how do we know sellers are still here? We will know because price came all the way on the line chart, hit there and dropped. This tells us that sellers are still here. Am I making sense?
Yeah, yes, sir.
So now that we know
Yes,
sellers
sir.
are still here, where are you going to sell the market again? The same point. So see how the market go up, came down, broke structure, came back to retest exactly that same black line. Another big move. Boom, to the downside. Is this difficult?
No?
No.
Not at all.
So when you take any market, look at the bigger picture and the bigger structure to identify the trend, which is what I call look for trend or those in domination. Then you look for the area of interest. Okay? Trend or those in domination. And then you look for the area of interest. So the trend, we've already done that. Area of interest is the PSR or the black line that I'm trying to explain to all of you now. Okay, so now that we have our area of interest, which is the PSR, we see that here on the PSR, buyers took the price up. Then price stays below, and then sellers push the price down. Now, what do you think will happen if the market is able to rise from below here, come all the way here, give a close above, and does this, do this, does this, do this, and stops here? What do you think is likely to happen?
A, a bias will push it
Sorry
upward.
to sell.
Perfect.
Sorry to buy.
Perfect. Okay, so it doesn't matter the up and down consolidation it will do, as long as the market will give an indication or initiative, a close above this black line. After that, even if it does down, up in this range, you just keep monitoring. As long as it will one day move up and drop down to stay here and stay above is your buy entry. Why are you buying? Because previously the market bought from this exact point and the market used the exact point to sell. So this means that if now we are getting a close above these sellers, it means above the sellers, buyers can now take charge. And where is your first TP? From here, they previously bought to here. Can you all see that?
Yes, sir.
So it's very possible if they take charge here, they can easily push the market to here. Exactly. And this thing will happen easily without any stress. But it might take a long time for market to maybe consolidate up and down. You might enter, it might stop you down. Don't give up. Still keep to the black line. Keep to the PSR. But what if the market does all these things and still come down, go up, come down, and stay below here? What do you think is going to happen? This is your
Like,
sell entry. Simple. Is it simple? But if you are selling here, you sell. It gives you some sell. It doesn't go much. And it comes hit above, hit here, and constantly does not go below buy entry. Am I making sense?
Yes, sir.
That's it. Simple. So let me say this last thing before we because it doesn't take long for the Zoom to close. Um, so we can see that the Japanese yen or the Japanese currency index, we can see it was bearish. It takes and now let's see buyers are here on this red line. They push market up. Now the market comes down, hit the buyers. There was a minimal reaction, just a small reaction. This is a daily time frame point. Then consolidation around it. We saw a break below it. Can you all see what I'm seeing, guys? See,
Yes, sir.
you see the red line? When this market will fall even from here, did it not retest the red line before selling?
It did.
Yes. So below these buyers here, this close here, and this move below here tells us sellers are in charge below this red line. So now this week, the whole week, the whole week has done an engulfing activity. We have a bullish engulfing. You see this? It's called bullish engulfing. It engulfs 1, 2, 3 candles up to here. Okay, but we know sellers are here on the below the black line, the red line.
The
Now
red line.
the question to you is, what do you think will happen if the market is to get to the red line here?
The sellers will activate and
It is
push it
very
down.
possible sellers will react when the market gets to the black line. But what do you think if they react and the market even comes down but does not make a lower low, but it stops somewhere, let's say here, maybe it stopped here. What do you think will happen if this market goes above the red line?
It will
The
sell.
buyers will
Sorry,
take charge.
Buyers will take charge exactly from the red line. So the moment we get the indication or a move above the red line, all you are looking for now is buys. But
A retest,
you
yes.
want the market to stay above the red line and not below for buys. So if you enter buys here and the market goes up and comes down, you must close because this market is bearish. But we are only leveraging on the early buy entry because of the PSR. Okay, and this qualifies to be a PSR because this point was a buy and then it was also used for a sell. Any point on your chart price that is being used as both sell and for a buy is called precision support resistance. That's the PSR. That's the definition for the PSR. Okay, if your point has not been used for both a sell and a buy, it doesn't qualify to be a PSR yet. So once
Okay.
we see a close above the red line and price comes down, goes up again, stay below, and it will always use this red line before it buys. I'm telling you, it will always use the red line before it buys. So your entry for the buy is the red line. And when you take this entry, where do you think is going to be your target?
a black line.
At the black line.
Exactly. We are looking at external point. So the black line price can get to the black line. It can just come all the way to the black line. Boom. Okay, it can come to the black line. But if you take this entry here and it stays below, you are done with the buy. This is a risky buy because market is already bearish. But if the fundamentals and everything is strong on the Japanese yen currency and it keeps going up, your target is the black line because this is the only exact place externally where sellers are really sitting. Okay, now we can internally here, let's look at some internal stops. There are buyers here, right?
Yes.
There are buyers here. Buyers push price up, push price up. Price get to this same place, buyers push it up a little bit. We hit, we move up, we close. Notice how exactly that same place was retested for the market to sell. This is what we call PSR. So you have to refine this into an exact point where the buy and then the sell met, took off, the crash. Now, I can put this here, and this is going to be my internal PSR. I'm telling you, if the market stays above the red line in the coming month or coming weeks, the immediate TP is going to be here. And so we are looking, I'm interested in the external point, but if you want to look at internal points, this is the main internal point here. That's it. So from here, you can close your trade or take profit here. Because within this all range, market is still bearish. And it can utilize here and still drop back to stay below the red line and sell. Or come back and retest here. Okay. Now, what I wanted to do to tell you is that if you are using GBP, USDJPY, you need to look at the Japanese yen or the index and then the dollar index. Okay, so now we can see that the dollar index was bearish. Sorry, the Japanese currency index was bearish, and we are seeing an engulfing bullish candle. But we want to be sure if it will buy at least up to this point when it's above this red line. That is what is going to validate this buy. So the moment you see that price is becoming bullish here, if you are on USDJPY, and you have to also look at the dollar index. Now, this is the dollar index, daily time frame. Let me go to daily time frame. You can see last week there was a very strong bearish, last Friday, a very strong bearish candle. You see this?
Yes, sir.
Good. So the Japanese yen is bullish, which is here.